A lot has happened over the past month with Trump's Liberation Day and fears over US-China trade creating volatility across the commodity markets. But what now? And how is copper, or Dr. Copper, holding up? I'm Fiona Cincotta at StoneX, and to talk us through this and more, I'm joined by Senior Metals Analyst at StoneX, Natalie Scott-Gray. Thank you for joining us today.
Pleasure to be here.
So last time we spoke back in March, you outlined the landscape for global tariffs and the potential impact to the base metal market. Perhaps a good place to start is to ask what has happened since then.
Great question. I would say potentially the best way to look at the impact to the industrial metals, or the base metals specifically, is to look at what happened with price action pre the 2nd of April and then post the 2nd of April, with, of course, that day being the day that Trump released or announced his reciprocal tariffs on his trading partners. So if we say pre-tariffs, with that in mind, the base metal index started the year robustly. So we saw the LME index, it was up 7%. Base metals were actually the second best performing commodity asset. This was supported by the fact we had a weak US dollar. There was optimism about the stimulus coming out of China and growth for the economy there. And also we had a series of tariff independent supply risks. But if we look post the 2nd of April, base metals and the index, it is down 6%. So we've almost seen all those gains wiped out. As it stands, base metals are the second weakest performing commodity sector, only above energy. And the driver behind this isn't just the reciprocal tariffs, but it's really the escalation in tensions between China and the United States. So when we look at the industrial metals market, China's always front and center because it is the biggest producer and it's the biggest consumer. Now, as it stands, the US has 145% tariffs on Chinese goods coming into the country, and China now has 125% tariffs on US goods going into the country. So effectively what this has done for China is wipe out about 15% of its export market. So that's what the US made up. And if we consider the fact that 25% of GDP last year came from robust exports for China, and that's how they hit that 5% target, if we're seeing 15% being wiped out where we are at the moment, of course this is creating negative headwinds and demand concerns for the industrial metals. Now within China specifically, because we still haven't seen a stabilization in the property market and record low consumer confidence, it's lifted a little bit with those stimulus announcements, but it's really been hovering at the lowest level for the last 6 months. It's not surprising that the back end of last month, at the end of April, the IMF has now downgraded its outlook for China. It's fallen to 4%. That's their expectation, which of course is a whole percentage point below the 5%, which is what China wanted to obtain. Now, just on US-China trade talks, there's a lot of headlines out there about if progress is happening, but the official statement from the the foreign minister has said that no trade talks have been taken place between China and the US at present. So that's really the reality of where we are. Just leaving that aside and looking at the tariffs actually on the base metal market and what that landscape looks like. Last time we spoke, we already had from the 12th of March, the 25% tariffs on aluminium going into the US. That's a blanket tariff. That still remained in place. As a result of the reciprocal tariffs from the 2nd of April, we understand that lead imports now have 10% tariffs going into the US, but all the other base metals have been exempt. But here, copper's of particular interest because on the 25th of February, Trump signed the executive order under Section 232 to do an investigation whether he wants to put tariffs on copper imports. And there's a huge amount of uncertainty here. So he's doing this because his goal is to increase industrial self-sufficiency. And the timeline for the investigation is 270 days. So that could be the maximum amount of time before we get an announcement. But he's also come forward and said we might get an answer about this sooner. So really, the market has to weigh up what's the timeline for announcement. We don't know. It could be 270 days. It could be sooner. We also don't know if there's going to be country exemptions, and we're not sure what level these tariffs are going to come in. Market expectations have moved from 10% up to 25%. Now it's moving a little bit lower again. So a huge amount of uncertainty here means it's not surprising that copper price volatility has risen to its highest level since 2022.
So if we focus on copper, how do you see the impact of these potential tariffs affecting the market?
So in our base case for the micro story, so the fundamentals for copper, we expect that the market is going to be relatively balanced both this year and next year. So we have accelerating mine production, steady refined output, and quite moderate demand. So if we're looking at the impact from the threat of these tariffs, it really hits the micro story in two ways. So the first way is the fact that US domestic prices have soared, which is expected because there's supply risks. So the US has to import 45% of its copper requirement for demand. So domestic prices have lifted. But secondly, we're seeing very significant trade rerouting. So the high premium for copper is attracting copper units into the country. Market players want to get copper into the US before tariffs come in, so there's this rush to get material. It's our understanding that over the last several months, we have seen about 500,000 tons of copper get directed or is still on its way going into the US. And this material is either coming from traditional trade partners, so like Chile or Canada, but it's now also coming from markets of last resort like the LME or the Shanghai Future Exchange. So what it's doing is it's creating tightness outside of the US market for copper units. And it's really pivotal right now because not only is China going through its peak demand consumption season, it will continue to until about mid-May, but trade that normally happened between China and the United States is being altered. So the US last year was the largest importer of scrap material into China. It accounted for about 20%. Now, the trade figures we don't have out for April yet, but for the March ones we did. So we saw the level of scrap copper going from the US into China halve in March. And it's our understanding or our expectation that we're going to see scrap levels almost fall to zero from the US going into China. So now we're looking at the micro picture, and there is less material available outside of the US. And within China, it's its peak demand time, and supply is getting further constrained, not only on scrap, but also for cathodes as well. So bullish themes are very evident in the micro story for copper at the moment.
Okay, so we've covered the general tariff landscape, the impact of potential US copper tariffs on the micro story for copper. So the bigger picture, how do you see copper prices performing this year?
Well, if we look at copper prices since the 2nd of April, it is very evident that copper is caught between this bullish micro story of where there is tightness of supply outside of the US versus the wider macro landscape and the implications of a global trade war. So in our base case, we do see globally that copper will be balanced this year and next year, but we are of the view the longer it takes for tariffs to be implemented by the US, the higher price support we will expect for copper because it's creating that tightness in the market, particularly coming to a head at the moment with that peak demand in China. It's showing in stocks. So when we look at Shanghai Future Exchange seasonality basis, stocks currently are well below the 5-year average. So that micro story will help maintain higher copper prices. But we have to remember ultimately that copper has the characteristics of Dr. Copper. It will reflect the health of global industrial output. The IMF and the World Bank have downgraded global growth forecasts. So in our view, while the tensions between China and the US remain elevated, we find it very difficult to see copper hitting a new nominal high.
Excellent. Well, thank you so much for your expert analysis. Really appreciated, as always.
Pleasure to be here. Thank you.
For more videos like this, please do like and subscribe.